We will keep rolling now with Jason Jessup, the CEO and Director of Magna Mining. Jason has over 25 years of experience in the mining industry. He's entrepreneurial-minded business professional with experience in critically evaluating and leading positive changes at mining operations. In 2016, he co-founded Magna Mining, which closed an RTO and began trading on the TSXV as Magna Mining under the ticker symbol NICU. So please welcome Jason.
Good morning. I'd like to start just telling a little bit of background about myself and Magna. So in 2000, I moved to Sudbury, Ontario to work for a company called Inco. And Inco was one of the two major mining companies that controlled the Sudbury Basin mining. And in 2003, a junior company called FNX Mining acquired 5 non-core past-producing mines from Inco, and in 2003 restarted the first one, the McCreedy West mine. In 2005, I left Inco to join FNX Mining, and over the next 5 years, we brought 2 more mines into production, as well as making a number of significant discoveries. In 2010, we were acquired for $1.5 billion to become Quadra FNX. 2 years later, Quadra FNX was acquired for $3 billion. Now, I moved on, did some other things, but by 2016, I recognized that these mines that we created so much value in as FNX were now back in the hands of a major mining company and were non-core. This inspired me to found Magna in 2016. So I brought together some of my former colleagues from FNX, and in 2017 made our first acquisition. 2021 we went public. In 2022 we made our second acquisition, the Crane Hill mine. And in February of this year, we closed the acquisition of 8 properties from KGHM, including the producing McCreedy West copper mine, the Levack mine and Podolsky mine, which are on care and maintenance, and 5 exploration properties. So this kind of brings us up to speed now on where this company came from, and I think the opportunity we have to leverage the experience of our team with FNX Mining in Sudbury. There will be a number of forward-looking statements, so I do caution the listeners to do your own due diligence. So a little bit about Sudbury. Sudbury is a mining camp that has been around for a long time. It's been in operation for well over 100 years. As I mentioned, dominated by 2 major mining companies, originally Inco and Falconbridge, now Vale and Glencore. Magna is the only other operating company in Sudbury. Inco and Falconbridge built smelters and large concentrators, so now owned by Vale and Glencore. And this creates a unique opportunity where we can grow as a company without needing to build our own mills and smelters. We sell our ore to Vale and Glencore. This creates very low-cost growth profile and low capital intensity growth. Now, one of the great things about being in a camp like Sudbury, and this is really, I find, more and more challenging in our industry, is to have that social license to operate. But the people in Sudbury, including the First Nations, are very much pro-mining and want to see more mining because their livelihoods depend on it. But the reason why Sudbury is there is because it truly is a world-class geological endowment of minerals, and I believe it has another 50 years of mining ahead of it. So our production, or our growth profile, is really based on 3 key pillars. The first one, production, so taking our McCreedy West mine, growing production there, using that cash flow to continue to grow and restart other mines. The second pillar is exploration. Much like our team at FNX, who currently now work for Magna, we believe there's tremendous opportunity for new discoveries of deposits on our properties in Sudbury. And the third pillar of growth, which we've been very successful at, is making accretive acquisitions of non-core assets from major mining companies in Sudbury. So this is a map of the Sudbury Basin. It was created by a meteorite impact about 1.85 billion years ago. The mines sit along the rim of that basin now, as well as just in the footwall outside of it. As you can see right here, this is Vale's Clarabelle Mill, as well as their Copper Cliff smelter. Glencore has their Strathcona smelter, or their Strathcona Mill, and their Falconbridge smelter. So all in close proximity to our existing operations, including our producing McCreedy West mine. The mines you see there in blue are all fully permitted past producing mines that we have a plan to open up again over the next coming years. We have 3 mines right now that have NI 43-101 resources and 3 properties we acquired from KGHM that still have historic resources that we will be updating to compliant resources this year. But within our NI 43-101 resources, we have 48 million tons of very good grade copper, nickel, cobalt, platinum, palladium, gold, and silver ores. And we believe that we have currently enough resources to build a very long plan of growth and mining in Sudbury. So with all these projects, I get asked a lot, how are you going to focus and what are going to be your priorities? Well, it's very simple. We're laser focused on our McCreedy West mine right now. It is our producing copper mine. It has been undercapitalized by the previous owner. So this year, we are spending the capital to set ourselves up, do the underground development to get ahead of our mining so we can drill off more stopes, have more flexibility, increase production, and focus on higher grades. That work is ongoing right now. And then the goal would be that next year we'll have significant cash flows from McCreedy West that we can reinvest and bootstrap the restart of our Levack mine, then our Crane Hill mine, Podolsky mine, and eventually our Shakespeare project. That is our plan, and we believe that we have the team, the assets to execute on that. So this is an aerial view of our McCreedy West mine, a very simple operation, portal access, shallow mine. Current levels we're mining from are the deepest level is the 1,300-foot level, so very shallow. Simple operation, we bring our ore to surface, it gets crushed, it gets sampled, it gets shipped off to Vale or Glencore's mill, and then we get paid for it. Here's the property boundaries of McCreedy West and Levack. They're side by side, actually connected underground. So one of the unique things about Sudbury deposits is they often have both a contact deposit as well as footwall deposits. And quite often, these different zones will have different metal tenors. So we have the intermain nickel zone, which is primarily nickel. We have our PM zone in the footwall, which is primarily platinum, palladium, gold with a little bit of copper and nickel. And then we have our 700 copper zone. And that is where our focus is right now. It's where we're making all of our production and the best margins. And it is copper dominated with some PGMs and a small amount of nickel. As I mentioned, the Sudbury Basin has a contact, and this is where the nickel zone sits. And then in the footwall, behind that, is where the copper mineralization has developed and formed these deposits. Sudbury is very unique in that it can have some extremely high-grade copper in these footwall deposits and very elevated precious metals. And a lot of people don't recognize this because until FNX, no one really talked about it. Inco and Falconbridge didn't report grades and assay results. But we've been putting out some spectacular grades, and I think people are finally starting to notice. So in the 700 complex, we have about 5.2 million tons of resource right now, and it is primarily copper, out of just under 2% copper, 0.7 nickel, and about 2.5 grams of precious metals. So this image shows in green our planned development for this year and the first half of next year. In orange, our planned stopes that were in a mine plan that we inherited when we took over in March. Now we're working on optimizing this and doing more diamond drilling, and it has been working very well for us. So some of the drill holes that we've put out since acquiring the property have been absolutely spectacular. For example, this hole here intersected outside of the planned stope shape, 14% copper, 3.5 nickel, and 6 grams over almost 10 meters. So we are working now to incorporate these higher grade results into our mine plan, and we're going to really start seeing those results in Q4. So our Levack mine is, again, located right beside McCreedy West, just down the road. It's a long life mine, had produced for over 100 years, producing more than 65 million tons of ore from underground. Went on care and maintenance in 2019. Still has a working shaft. People are going underground every day. It's kept on care and maintenance, and it's used as secondary egress for both the McCreedy West mine as well as Glencore's neighboring Onaping Depth project. So as you can see from this image, the two mines are connected on the 1600 level. And Levack, much like McCreedy, has a contact nickel-dominated deposit as well as high-grade copper PGM footwall zones. So there is a historic resource that was done by KGHM in 2022, and it has approximately 5 million tons of contact mineralization in the indicated and inferred categories, and just under 2 million tons of footwall mineralization, again in the indicated and inferred, and this is historic resource. We will be coming out with our own resource later this year. Now back in 2008, I moved over from McCreedy West mine when I was at FNX to the Levack mine to bring the Morrison deposit into production. And the Morrison deposit was a discovery that FNX made that was extremely high-grade copper. We mined from that from 2009 until 2019 and went on care and maintenance. There's still about 700,000 tons of very good copper PGM ore left in that mine as a historic resource, and we think there's also a lot of additional upside in exploration. But our focus on our restart plan for the Levack mine is actually looking a lot closer to surface. So some of the drill results we've been putting out since acquiring the property are focused in an area we call the Keel Zone. And in this area, very close to surface, within 400 feet of surface, there's a zone of very high-grade copper veins where we've had multiple intersections, including some press releases that we put out today on some new drill holes of 25% copper. So we're looking right now at accessing this through a new ramp from surface that would come down, and that would give us access to not only the Keel Zone to mine that high-grade copper, but also to connect up to our number 1 and number 2 ore bodies to mine some very good grade nickel copper mineralization. And once we are connected up, then we're connected up to the rest of the infrastructure, and it opens up the entire mine for ramp access. So this is the plan we're working on right now, and we'll have a better mine plan delineated by the end of the year. Now, one of the other exciting things we're doing right now is we are going to be entering into an agreement very shortly to provide secondary egress to Vale's Coleman mine, which is next door. And that's the mine I started working at when I came to Sudbury. And what this means is there'll be some development done this year, and that's shown in green, that will give us access to the 3600 level, which hasn't been reactivated probably since the mid-1990s. That's going to give us drilling platforms to drill off more footwall style mineralization at depth, and we're very excited about that opportunity. So I talked a little bit about the footwall deposits, and again, one of our key pillars of growth will be on exploration and discovering more high-grade footwall mineralization, and we truly believe there is another high-grade deposit to be discovered at the Levack mine. These plains you see here in yellow are the breccia corridors. That's the rock type in the footwall that hosts these high-grade copper zones. And you can see our Morrison deposit right here is situated within that, as well as our Keel Zone up here. There's also a fault called the Facunas Fault that offsets all the mineralization. And on this side of the fault, we have our property boundary, and next to us is Vale. As I was saying, I worked at Vale's Coleman mine next door, and there's a footwall zone that they've been mining there for the past 30 years, mining somewhere in the range of 15 million tons of high-grade copper, much like the Morrison deposit and the Keel Zone. And they have drilled that across very close to our boundary. So this image is the same, but it's showing some of the drill hole intersections on there. As I mentioned, very high-grade copper up in the keel zone. It trends down to the Morrison deposit. In the middle here, there has been very little exploration done. When we were at FNX and we discovered the Morrison deposit, it was all hands on deck to drill that off and get it into production. And we produced, while I was there from 2009 to 2011, quarter after quarter of 8 to 10% copper, 8 to 10 grams of precious metals, and 1 to 1.5% nickel, quarter after quarter after quarter. So these narrow veins of high grade can produce some very good grades shipped off to the mill and potentially some very high margin rock. Now, when I look at this, we've announced some drill results just this morning, so I encourage all of you to look at our website and see those results. There's an exciting area where we hit a very high-grade, narrow intersection down below the number 3 ore body that is trending right towards this Morrison deposit in a very large, untested area. So that's a really exciting announcement for us, so I encourage you to take a look at that. But the other area that I mentioned is this 3600 drilling drift, where we'll be connecting up to Valley's Coleman mine. And before KGHM sold this mine, they wanted to test this area on the other side of the fault, which is adjacent to Valley's property, where I said they've been drilling almost right up to that boundary. And they drilled 2 holes from surface, very deep, long holes. And one of those holes intersected 33% copper, 0.9% nickel, and 24 grams of platinum, palladium, gold combined. Very high-grade hit. But it wasn't enough for them to follow up. They sold the property to us. Now we are looking to set up a diamond drill underground from this area so we can drill this off. And hopefully, much like this trend that they've been mining for 30 years towards us, continues onto our property, and we can delineate additional mineralization there that we can put into a future mine plan. It's a very exciting target for us, and we'll be drilling that within the next couple months. Now, if you look at this Valley deposit right here that hits the back of that breccia zone, and this is what is believed to be the source of all that mineralization in the footwall throughout this north range. On the other side of the fault is our property. There's been very little drilling done in the back there to explore this area, but the drilling that has been done has identified some very high-grade veins, very similar to what's been mined here for the last 30 years. And one of the intersections was 2% nickel, 12% copper, and 2 ounces per ton platinum, palladium, gold over 1.8 meters. And if you look up trend on this breccia plane, you have the keel zone. In the middle, almost no drilling at all. So we're, again, very excited to get this ramp in place so we can properly drill that off with close space drilling and hopefully delineate a lot more of this mineralization between the keel zone and the back of that number 3 footwall. As well, between McCreedy West and Levack Mine, there's over 2 kilometers of underexplored footwall environment where there's been very little drilling done, but some of the drilling that stepped out over 600 feet outside our resource at McCreedy West has intersected 30% copper over 2 feet. So we believe this area in here has tremendous potential for more copper mineralization. From our capital structure, we have about 200 million shares outstanding. At the end of Q1, we had $38 million cash in the bank, which is very important because that allows us to invest the necessary capital into McCreedy West to set ourselves up properly this year to have good cash flows in 2026 that allow us to bootstrap and continue to build out our growth profile. As well, we have a very strong shareholder base, including our largest shareholder, Dundee Corp, who's actually here this week, who owns just over 20% of our company and been very supportive since we RTO'd in 2021. So to summarize, why invest in Magna? We are a growth-oriented junior copper producer. We have near-term exploration results coming out. As I mentioned, we had a great news release come out this morning. We have very strong shareholder support, as well as government support, and we've had a couple announcements of government grants that have been issued to Magna to help grow critical minerals in Ontario and Canada. And we also have, as our third pillar of growth, potential for more synergistic acquisitions in the Sudbury Basin, much like our acquisition of KGHM. And I would think there's a strong possibility over the next 12 months to announce additional acquisitions in the basin that can help further grow our production profile. Thank you very much.